The US dollar is plummeting at an alarming rate, facing its steepest decline since the financial crisis of 2008. In just a single week, the dollar index DXY has plunged from 108 to 103, sending shockwaves through global markets. This dramatic drop marks the most intense uncertainty surrounding the US economy in years, and it's clear that investors are starting to lose confidence in America's economic future. Historically, in times of turmoil, investors flock to the dollar, seeking it as a safe haven. But this time, something is different. The market's reaction has been completely unpredictable. Several critical factors are now pushing the dollar into a freefall. The current administration's aggressive trade policies, which include sweeping tariffs on major trading partners like Canada and Mexico, have sparked fears of retaliatory measures that could reduce global demand for US dollars. The looming threat of a trade war is now intensifying concerns about the dollar's stability. Adding to the pressure, inflation expectations are surging to 4.9%. The highest since late 2023, squeezing consumer spending and further eroding investor confidence. The Federal Reserve's Atlanta branch has projected a 2.4% contraction in GDP for the first quarter, amplifying fears of an impending recession. While the U.S. economy falters, Europe and China are surging ahead. European stock markets are rising sharply, fueled by increased defense spending and stimulus efforts, while China pursues domestic policies that are boosting consumption and strengthening its economy. Gold, historically seen as a hedge against currency instability, has broken the $3,000 mark per ounce, signaling a massive flight from the US dollar. Meanwhile, US Treasury yields are sinking, and as the prospect of multiple rate cuts from the Federal Reserve looms large, investors are rethinking their strategies. With the US economy slowing, capital is fleeing to foreign markets, leaving the dollar even more vulnerable. Despite reassurances from government officials about maintaining a strong dollar policy, the reality is far more grim. Financial institutions like Morgan Stanley have downgraded their forecasts for the dollar, citing the slowdown in the U.S. economy and the growing competition from abroad. The very policies that were supposed to foster American growth are now working against the dollar, exacerbating inflation and adding to the strain on financial markets. The dollar's sharp decline may just be the beginning of a prolonged period of instability in U.S. markets. The impact of tariffs on Chinese goods is becoming increasingly evident. The tariffs affect three key players: the U.S. consumer, the U.S. importer, and the Chinese exporter. The burden of these tariffs can't simply be absorbed, especially by Chinese suppliers who are already facing their own set of challenges. U.S. supply chains remain disrupted, making it impossible to replace imported Chinese goods with domestic alternatives. As a result, companies like Walmart have no choice but to pass on these costs to American consumers, who are already struggling with rising prices. The further decline of the dollar only deepens the crisis. Morgan Stanley's prediction of a weaker dollar is now coming true, signaling the return of recession fears. While the dollar rebounded after the 2008 crisis, the current situation is drastically different. The ongoing trade conflicts and the administration's aggressive stance have led to a broader rejection of U.S. goods. This has resulted in counter-tariffs, a rise in anti-American sentiment, and declining company earnings. Even the European Union, despite its own economic challenges, is retaliating with its own tariffs. With the U.S. imposing $28 billion in tariffs, the EU is preparing countermeasures worth $26 billion set to roll out by mid-April. U.S. companies are bracing for significant revenue losses as demand for their products slumps, which will further weaken the dollar. The administration's ability to sustain its economic policies is under intense scrutiny. Domestic consumers, already grappling with low financial confidence, will struggle to absorb the financial burden of these tariffs. The decline in consumer spending is already evident, and the broader economic sentiment continues to falter. In response, the Commerce Secretary has attempted to spin the dollar's decline as a natural correction. But this shift in narrative hints at growing concern within the administration over the state of the economy. There's even growing speculation that the government may be deliberately engineering a recession in order to restructure the economy. With rising tariffs, companies face higher costs, and a subsequent wave of unemployment may be on the horizon. The administration is well aware of the financial risks its policies are creating, but remains committed to its fiscal strategy. The national deficit remains a looming issue, and the U.S. is increasingly dependent on imports. Trade policies are contributing to the dollar's weakening, which could undo any intended economic benefits. Even Trump's tax cuts, projected to reduce government revenue by $5 trillion over the next decade, may not be enough to offset the negative consequences of his trade policies. The financial burden of tariffs will ultimately fall on U.S. consumers, further compounding the economic crisis. The challenge facing the administration is monumental. Avoiding a full-blown recession is still possible, but it will require flawless execution of fiscal and trade policies. Major financial institutions, including JP Morgan and Goldman Sachs, now predict an escalating likelihood of a recession within the next year. Despite this, some officials remain optimistic, asserting that the U.S. economy will ultimately benefit from the trade policies. But the window for a favorable outcome is rapidly closing, and the chance of avoiding a downturn seems increasingly unlikely. Global economic powers are unlikely to acquiesce to U.S. demands without significant pushback. The economic battles ahead will hinge on the ability to adapt policies, restore investor confidence, and navigate the tightening global financial environment. The situation remains fluid, but the stakes have never been higher. Meanwhile, Tesla is caught in a storm of controversy, and it's far from over. Rising concerns about the company's questionable practices and Elon Musk's increasingly erratic and provocative behavior are pushing Europe's financial and political institutions to the edge. The consequences for the once gilded electric car giant are becoming impossible to ignore. In early 2025, the storm erupted when one of Denmark's largest pension funds, Akademisk Pension, dropped a bombshell. It would blacklist Tesla. The fund sold off its remaining shares and added the company to its exclusion list. This bold action is not just about market performance. It's a direct response to what the fund sees as deeply troubling behavior from Tesla and its CEO. Jens Monk Holst, CEO of Akademisk Pension, didn't mince words in his condemnation. Musk's increasingly volatile public actions and Tesla's brazen refusal to address mounting concerns about labor rights, corporate governance, and political interference led the fund to conclude that it could no longer justify any investment in Tesla. Holst openly declared that Musk's actions weren't just damaging Tesla's brand, they were destroying it. Musk's relentless meddling in politics, support for controversial figures, and general disregard for worker rights were a toxic cocktail that no longer held any promise for improvement. But Akademisk Pension wasn't alone. Pension Denmark, another major fund, followed suit, unloading a staggering 400 million kroner worth of Tesla shares. This move was sparked by Tesla's refusal to sign a collective bargaining agreement in Sweden, which sparked a wave of labor unrest that quickly spread across Scandinavia. Strikes erupted at Tesla service centers, and solidarity protests swept through Denmark and Norway. By the end of 2023, Tesla's Swedish operations were barely functioning. Service workers stopped delivering Teslas, charging stations went offline, and even license plate issuances ground to a halt. The once unthinkable idea of a complete collapse of Tesla operations in Sweden was quickly becoming reality. Unions in Denmark and Norway raised alarms, warning that they would begin blocking Tesla shipments in solidarity with their Swedish counterparts. With Tesla's refusal to address the crisis, Pension Denmark took decisive action in December 2023, moving Tesla to its exclusion list. And it wasn't just financial losses driving the decision. Labor leaders in Denmark, some of whom sat on Pension Denmark's board, were firm in their belief that the company's future was at risk if its labor disputes spread any further. This marks the beginning of a broader shift across Europe. Once heralded as the future of clean energy and innovation, Tesla is now being rejected by the very institutions that once celebrated it. And it's not just about money, it's about Tesla's image and brand. In January 2025, the damage to Tesla became glaringly obvious. The company's sales in Europe dropped 45%. Meanwhile, competitors saw a 37% increase in sales. As Tesla's European market share withered away, analysts noted that its once unshakable dominance was quickly slipping. Corporate car fleets, once a stronghold for Tesla, now saw flat or shrinking demand. Meanwhile, dozens of new electric vehicles from both European and Chinese automakers flooded the market, making Tesla's aging lineup seem increasingly irrelevant. This is not just a sales slump, it's a disaster that touches every corner of Tesla's brand identity. A survey in January 2025 revealed that a staggering 59% of Britons, both current EV owners and potential buyers, would now refuse to buy a Tesla because of Elon Musk. What was once a cutting-edge, eco-friendly status symbol has now become a badge of dishonor. On social media, hashtags like #TeslaTakedown and #SwastikaCars have gone viral, with outrage at Musk's controversial political ties and polarizing rhetoric now threatening to eclipse the brand's image. One longtime Tesla driver in the UK went public with his decision to trade in his car, despite his affection for Tesla's technology. He confessed that he could no longer stomach being associated with Musk's increasingly divisive political stances. This sentiment echoed across Europe, as former Tesla enthusiasts voiced their growing disillusionment. Tesla owners, once greeted with admiration for their choice of vehicle, now face heckling, rude gestures, and outright disdain on the streets. The once untouchable brand has crashed from hero to villain, all because of one man's increasingly reckless behavior, Elon Musk. Musk's descent into political extremism has become the primary catalyst for Tesla's unraveling. His recent endorsements of far-right figures and populist movements have alarmed not only European politicians but also ordinary consumers. Musk's active promotion of Germany's far-right AfD party has raised alarms, particularly his high-profile live-streamed interview with AfD leader Alice Weidel, which effectively gave the party a major platform. The AfD is a party under investigation for extremism, and Musk's endorsement has sent shockwaves through Germany, turning many potential Tesla customers against the brand. Musk's embrace of the far right isn't limited to Germany. In the UK, he's clashed openly with Prime Minister Rishi Sunak while supporting the Reform UK Party, a right-wing populist group. In Italy, he's formed ties with Giorgia Meloni, a nationalist leader known for her hardline stance on immigration. Musk's increasing polarization has pushed him far from the moderate, innovative tech mogul he once was, and with each new political tie-up, his influence on Tesla's future diminishes. But it's Musk's views on climate change that have sealed the deal for many European consumers. Once heralded as an environmental crusader, Musk has increasingly voiced skepticism about climate science. He has openly mocked climate change policies and sided with some of the world's most notorious climate deniers, fueling concerns that his anti-regulatory stance directly undermines Tesla's green image. Musk's recent remarks that urgent climate action might be overzealous have caused alarm, especially given his personal financial backing of Donald Trump's return to politics. In February 2025, European regulators set their sights on Musk's social media platform X, formerly known as Twitter, probing whether his hands-off approach is allowing disinformation and extremist content to proliferate. The risk is real. Musk's massive influence online could tip public opinion or even sway elections toward far-right ideologies. European authorities, already on high alert, are considering a range of sanctions to curb Musk's disruptive behavior and restore some semblance of order. Europe's anger isn't just limited to Musk's actions. The growing rift between the US and Europe, highlighted by Donald Trump's renewed interest in Greenland and his aggressive trade threats, has added fuel to the fire. European leaders have vowed to defend their sovereignty at all costs, sending a clear message to Washington that any attempt to undermine their values, be it through political influence or economic pressure, will be met with fierce opposition. Tesla's fate is now deeply intertwined with these geopolitical tensions, and the company's problems reflect a much larger shift in the transatlantic relationship. Musk, once a symbol of innovation and environmentalism, is now seen by many as a provocateur, undermining Europe's social, environmental, and political order for his own personal gains. Europe is making a stand, and as the continent braces for more pressure from both Musk's political maneuvers and Trump's foreign policy, it is increasingly clear that actions taken by figures like Musk and the companies they lead will face resolute pushback. Tesla's woes are a microcosm of a much larger struggle, one where values like environmental protection, labor rights, and national sovereignty are being tested. Musk's actions have cast a long shadow over Tesla, and it's unclear whether the company can survive the storm that's coming. That's the latest on today's top stories. What are your thoughts on Tesla's unraveling, Elon Musk's increasing political interference, and Europe's growing pushback? If you want to dive deeper into these issues or explore others, leave a comment below. Stay informed, stay curious, and we'll see you next time. Take care.